I really feel it's my time, think it's my year.
Yes. Good morning, everybody. Happy Friday. Welcome to the morning show, the best morning show in finance. Spencer Israel here with JC Parets and Steve Strazza. Tony's like, where you ladies at? We're right here. All right. Big day today. Obviously, we have a jobs number that's just out like a minute or two ago. We can talk about that if you'd like. Amazon, Apple, obviously the headlines today. We have a bunch of other stocks and charts to discuss. Very special guest joining us in about a half hour from now. Alfonso de Pablos, the brains and the brawn behind much of what we do here at the morning show, will be joining us to share a few of his charts and talk us through how he sees the markets. That'll be a lot of fun. That'll be at 9 o'clock. We got Kimmy Sokoloff at 9:15. Ian Cully at 9:30. It's going to be a show, everyone. It's going to be a show. Good morning. If you're watching us on Twitter, hop on over to YouTube and smash the like. Thank you very much. Let's go.
Hey, good morning.
Hey, guys.
What's up?
Oh, just playing a little golf with Strazza yesterday. No big deal.
You had fun.
It was
had a good time.
Dude, that course is crazy, huh?
Really amazing.
Dude, it's like this rock quarry. Do you know what kind of rocks they were? Did the guy tell you?
So the guy that I was talking to when we stopped at the 11th said that it's limestone, or was limestone.
Dude, it's crazy. Like some of these par threes at the top of the quarry, like I was looking for one of my balls because I don't really get in the fairway too much. So just Strazza's like, dude, don't like kill yourself looking for this ball.
I thought you were going to fall off a cliff. And the hole with the just giant dip, it's like a huge swimming pool almost carved out, and you got to try and go over it, which I don't think either of us did, but that was fun.
Neither one of us.
I think we have some footage actually.
Oh God,
are we gonna play this?
I think we have some footage.
Is it me or Strazza? Tell me it's not mine.
It's you.
Oh my God! All right, play it. Oh fuck me!
Of course, you were going to do that for the video.
That was not representative of how JC played. He was actually surprisingly good, particularly on the front nine.
Yeah, 2 bars on the front nine.
Sorry,
but look at that swing.
Sorry.
It's like some Charles Barkley action going on there.
I mean, of course that was going to happen. We didn't have our phones out. It's actually a rule at the country club, which I kind of like. But we didn't have our phones out really at all. As soon as we took them out to tape each other, we're just shanking.
We were also getting tired. We're a couple beers in already. Listen, for a couple of really terrible golfers, we had a good time on a beautiful course.
Yeah, I think, and we looked okay out there. I think we looked like
as long as you look good, that's all that matters.
Yeah, I don't think we looked that good. Strazza's walking around with his shirt tucked out. I'm like, dude, what kind of place do you think this is, man?
Oh, stop! Listen to this bullshit. So as soon as I get out of the car, JC's like, "What do you live in a barn? Like, tuck your shirt in." I'm like, "Okay, like, don't make me feel bad about it." I tuck my shirt in. Then we get to hanging out with his wife a couple hours later, and she's telling me stories about how he tries to play tennis in a sleeveless shirt.
Well, first of all, it wasn't me. It was her brother who showed up in a sleeveless shirt. That's another story altogether. Ken here, master of the obvious, telling me that my swing needs work. Yeah, thanks. Thanks. Appreciate the heads up on that one. Needless to say, I hadn't played golf in 10 years, and that was my 3rd time out this summer. I'm a terrible golfer. I'm okay with that. We had a good time, man. Talked some business, played some golf, came up with some good ideas. It was listen, at the end of the day, golf is good because it forces Strazza and me to kind of like get away from our phones, get away from everything. We're out in the middle of nowhere, so we're bound to come up with good ideas, and we did. Spencer Israel, we did. And we did chime into that meeting, that 3 o'clock meeting from like the 16th hole or something. Remember?
Yes.
You took a meeting.
Credit to you. Credit to you. You joined the meeting. You didn't have to. I didn't think you were gonna. Credit to you. I shudder at the ideas that you guys came up with, and I'm going to be just throwing
You're
on
gonna
me.
love
I'm going to
them.
love them. Okay. Anyway, state of the markets. Let's roll.
All right, all right. Well, listen, it's not all rainbows and butterflies in the market. I know it's been very, very, very easy to make money over the last several quarters. I mean, it is the most bullish time of the presidential cycle. It was really, really difficult to not make a lot of money in this period. Let's be serious. So it's not that you're smart or that I'm a genius or that Strazza is like Warren Buffett. It's been a ranging bull market. And it's the most bullish time of the year, and it was virtually impossible to not make money. Okay, great. Now is not that time anymore, and we are now in an environment where historically it's much more difficult to be making money. Why don't we show that seasonality chart to give people some perspective? You know, we're coming off the most bullish 3-quarter period of the entire 4-year cycle, and now a little bit of a break. Doesn't mean the market needs to crash. It doesn't mean it's 1929 all over again. It doesn't mean that, you know, the entire financial system is about to collapse. No, I think all of those things are a little bit extreme, but some back and filling in the major indexes, some sector rotation perhaps out of some of the sectors with lower weightings, I think make a lot of sense. And then the big catalyst, in my opinion, continues to be the U.S. dollar. Why don't you throw that one up there? The strength in the U.S. dollar has really been a headwind for equities over the last 6-7 years. Whenever the dollar is very strong, like it was in 2021, 22, for example, stocks really tend to struggle. And then when the dollar peaked at the end of September last year, early October, how did stocks do after that? They're breaking records. Best start to the year for the NASDAQ ever. You know, just monster returns, just historic returns for sure with a weaker dollar. So if this failed breakdown in the dollar is for real, now the dollar's squeezing, stocks are going to be under pressure, in my opinion, and we've already started to see some of that, and I think that continues. So why don't you just take a couple of, and I want Strazza to chime in, but take a look at a couple of the indexes here. You got the NASDAQ and the S&P 500 at critical levels of resistance. Doesn't mean the market needs to crash, but to think that this isn't going to, you know, at least serve as some resistance, some trouble up here, some, you know, churning. And look at the S&P, same exact thing. You know, I think it's irresponsible as an investor to think that we're just going to rip right through here like these levels don't exist. Spencer, can you throw up the S&P so you can see it's exactly the same thing? See, and then notice the exposure. Technology is over 50% of the NASDAQ 100. It's almost a third of the S&P 500. The NASDAQ has no energy or materials, neither does the S&P. S&P is 4% energy, 2% materials. The NASDAQ is literally 0% on each one of those. So that's how I see that. Strazza, anything you want to chime in on that before we get into some sentiment?
Yeah, when we talk about sideways, I think it's also important to mention that we're talking about sideways for the indexes, right? So some stocks beneath the surface might be doing very well in the environment that you're describing, right? They're just not the ones that we need to do well to drive the indexes higher.
Who's we?
Market participants.
Well, if you own the indexes, then I guess you need the indexes to go up. If you don't own the indexes, and I suppose that you don't, right? The way I learned from a wise Egyptian man many years ago, Strazza, is that if you trade the averages, you're going to get average returns.
I'm not talking about trading the averages. I'm not suggesting that people should. I'm just saying that seasonality chart you're showing is basically a mega cap growth index.
Yep, it's a great point. For sure. So just understand what it is that you own. A lot of people who have exposure to the market, to Strazza's point, have heavy weighting towards the indexes. And, you know, I continue to think that the back half of the year is going to look very different than the front half of the year. It doesn't mean that you can't make money. I think that from what I could tell, until the market proves otherwise, I think it's going to be much more stock specific. I think it's going to be much more sector specific, and more importantly. So when they say, you know, a stock pickers market, in my opinion, the back half of this year is what they're talking about. Maybe not the entire back half, but at least maybe through Halloween into November. And historically, maybe we get that whip into the end of the year. I could totally see that happening. Yep. But it's a sector pickers market, I think, is probably the best way to describe the environment we're currently in and what is most likely for the foreseeable future, no?
I would agree. Should we talk about rates? I would love to talk about rates.
Yeah, let's throw up slide 7 there. With rates going up, bonds really stuck below that 100 level. This is the IEF. This is the 7 to 10 year, just benchmark yield. This is the bond, and broke down, and we're stuck below that. So until the IEF is able to get back above 100, there's nothing to talk about here from the long side in bonds. The path resistance remains lower.
Yeah, but so how about the short side? Like, I don't know about you, but I would be hesitant to kind of step in here and short this, even though that's what the price action is suggesting.
Yeah, I mean, listen, large speculators have on their largest net short position in bonds ever. This bond in particular, actually, ever. Yeah. And, maybe they're right, but historically they're not. So I just don't necessarily want to be on the same side as large specs, particularly when they have on their biggest short position of all time. Like, I don't want to get in front of that train. So, I'm just an observer. For me, the bond market is more like information, not like anything. It is good information to help make more informed decisions in the stock market. It doesn't mean that we can't trade bonds. We do. I just don't like to trade here. I'd rather use that information to make better informed decisions in stocks.
No, I'm with you. Ian just made a good point in the chat. There are better trades out there. Yeah. I think too, though, the 30-year is 3 basis points away from, new closing highs, would be its highest level since like 2011. It's not something we should ignore. Like, what is that telling us? Is it telling us more about the Fed, more about the economy? I don't know.
More inflationary signals, which we're seeing a little bit of a bid out of oil recently, making new 3-month highs, seeing inflation-protected treasuries slightly outperforming nominal yielding treasuries, sort of hinting towards that. You look at 10-year break-evens, kind of inching higher. So maybe the higher rates is more of an inflation is not transitory sort of story.
Isn't that funny?
By the time everybody's like, oh, I guess inflation's gone forever. Not so fast. Yeah.
Watch that gasoline chart.
And then also, by the way, speaking of just hilarious, why don't you look at the fund flows? Great chart from Macro Charts. Did it make the chart report? I didn't catch that, but take a look at the chart from Macro Charts. This is slide 11, showing the fund flows into the major indexes, the S&P 500, and traders are essentially all in based on the data, just piling in. And historically, when they do that, it's normally not the best time to be buying stocks, but usually time to perhaps be feeding the ducks a little bit, which is interesting. Now, this is fund flow data. We can look at the other sentiment data. Take a look at go up a slide to slide 10. You can see how we aggregate the AAII, the Investors Intelligence bull bear spread, National Association of Active Investment Managers, volatility index, put call ratios, and sentiment has gone from one extreme to another. Yeah. So rather than it being tremendous opportunity because of the how bearish people are, we are now on the other side of that spectrum. And then one more chart just to dive in on there on slide 9, you could see that the average bulls between Investor Intelligence and AAII. So in other words, between advisories and individual investors, we now have the most bulls. We're making new 52-week highs, new multi-year highs, really, in terms of how many bulls we have, and new multi-year lows in terms of how many bears there are. So sentiment has dramatically shifted from one extreme to another.
Is it an extreme, though? This is an extreme, you think?
It's funny you should ask, because it's actually not extreme here. I actually have a good chart showing that there's still room here. Throw up slide 1. This is the bull bear spread. Actually, hold on. I want you to see with the annotations, because the annotations really tell the story. There you go. So throw it up with the annotations. And you could really see the to Strazza's point, like there's room to the upside. I guess I didn't do too great with that annotation. Do it again so you can see the annotation's right, but refresh that so you could really see that level. Is it at an extreme? Yes. Can it get more extreme? The answer is yes. Right? Why is it not showing that correctly?
Stop marking up your charts in PowerPoint.
It's not PowerPoint. It's Google Slides. What do you mean?
It's the same thing.
It's not the same thing. One is owned by Google and one is owned by Microsoft.
Oh, God.
Are you updating this? I don't know what to tell you. I mean,
it's already updated. There's nothing to. It's already updated. It's a beautiful annotation.
The point remains. We're getting close, but I think it's a little bit too soon to overthink sentiment here. It will get more extreme, I would imagine, and also there's just a lot of. If you're looking at too much sentiment and not enough price, you're going to be on the wrong side consistently. And
100%. That's why I started with price. But now we're looking. Now we're talking about like catalysts. The dollar, I think, is front and center.
Yeah.
Right. I think that lower bonds, not good for growth stocks and the biggest components of those indexes. And sentiment. I think it's important to recognize that sentiment has shifted. Can it get more extreme? Yes. Where does sentiment fall on the priority list in terms of importance of our decision making? Nowhere near the top, right? It's more kind of just putting things into context. You got these perma-bear sell-side analysts now capitulating and turning bullish. Like all of this is just classic stuff for, a market that's gone relentlessly higher going into a period where stocks should be struggling. So it's funny to see the perma-bears capitulating right as we enter that weak period.
When, I was talking a lot about the market and how things have evolved this cycle, starting like this time last year while I was overseas. And I've started the presentation talking about the environment and what the environment was like in summer to fall of last year, right? So we had seasonality as a tailwind. We had sentiment as a tailwind. It was extreme pessimism. Breadth, we were getting thrusts. Breadth was starting to look better. And then just like you said, intermarket, right? Dollar was rolling over. Now you're sitting here basically saying, almost all those things are the opposite, except for I would push back on breadth. Breadth is still good and I think improving with this kind of sector rotation that we're seeing.
100%, which I think gets back to time horizon, Strazza, right? So to your point, breadth is great. Participation hasn't been better, which I think leads me to the conclusion that any weakness we have during this seasonally weak period is just a period of digestion within an ongoing bull market. Yeah. We get that ripper into the end of the year and resume the bull market next year. I could totally see that. Again, we'll let the market's behavior dictate our actions. What I'm talking about, what's going to be happening around the holidays. I mean, we're so far from that, but just thinking through that as an investor in terms of how I'm positioning myself now versus what I might be doing later on this year. Like we've discussed here, I have more cash than I've had this entire bull market. I've had no technology stocks for a minute now. I mean, the last tech stock I had a big position in was Meta. We took profits on that at the end of June, if I recall. Yeah, in the end of June, because that's when our options expired. So, I don't really even want any technology exposure. I mean, below overhead supply like that, like not for me. And sure, there's going to be some opportunities maybe in the small and mid cap tech at the individual stock level. But in terms of like the big growth stocks that drive those tech indexes, I'm not interested in any of that at all, at least not right now.
I agree with you. What would you say about risk appetite right now?
I think people are coming around to, hey, you know what? Maybe this crazy Cuban was right all along, and maybe we are in a bull market. I was having lunch with Tom Lee, and him and I were laughing. I'm like, yo, like people think like you're like the second coming of Jesus Christ here. Like they think you're the greatest analyst of all time. Like, I mean, you're good and everything, but it seems like it's time to feed the ducks a little, and we're cracking up. And I'm like, man, I haven't gotten this many compliments in a long time. Both of us had been at that point. Yeah. And, I recently saw some comments of his getting a little negative too. So we're kind of on the same page. It's pretty funny. So Joe, bringing up the Magnificent Seven. For me, I'll take the field, right? Sticking with that golf theme, Strazza. See that? Give me the field.
I would take the field too, big time. I mean, I hope we'll get into earnings eventually because I got things to say about draft.
I'm trying to. Let's go. Amazon, Apple. We got more. There's Coinbase, DraftKings, Square / Block. We got some good ones today.
Let's talk about it.
Yeah.
First of all, I just want to reiterate
first.
Spencer gets when it comes to earnings, but the fact that this morning on Slack, Spencer wants to talk about interest rates, I feel like I don't even know you.
Well, yeah, but I was responding to Ian specifically because Ian's
Oh.
gonna come on in 40 minutes, and
I was gonna say Spencer Israel never texted me about bonds. I was very excited about it. He should have just gone with it and said, "Oh yeah, GC, you know."
No. All right. Apple here. Story on this one was tough comps. Apparently, also, Strazza, we lost your video, but are you still with us? Okay, we're back. Story with Apple. Let's bring the chart up on the screen. Come on now. It was a good quarter, tough comps is what they're saying. So the EPS came in above, revenue came in above, and a lot of their year-over-year comps were last year was so good that this year is just tough to compare it to. The highlight seems to be services, which like they really I doubled, tripled down on a couple of years ago, and you got to give them credit. I mean, their services revenue topped $21 billion last quarter. I'm looking at a chart of their services revenue going back 10 years. And it's linear. It's just up like almost every quarter. This segment goes up. And it's been one of their growth drivers. So credit to them.
Services, and pay attention to wearables. Wearables is also big for them. And I think you're 100% right, Spencer. Like, that's really what the stock should move on at this point. We all know what iPhone sales are pretty much going to do.
Yeah.
Clearly dominating that market. Now it's how much money they can milk out of the ecosystem, which is going to show up in services. And then wearables is expected to be the future growth driver. But what's just truly incredible about Apple is if you were to split off all their different revenue into separate companies, they're all like large or mega caps alone. It's just amazing what this company's been able to do over the years.
Like, I'm not even going to mention the iPad revenue, but that had almost $6 billion in revenue, right? That was just the iPad.
It's iPads. We're talking about iPads here.
iPads.
Yeah. It's kind of crazy. Did you see their cash balance? Did you catch that?
Oh, 150. Was that it? Or 160?
Any news? Yeah, that sounds right. Any news on buybacks?
I didn't actually see anything about that.
They tend to be pretty tactical and opportunistic at buying back their stock. So I wouldn't be surprised if they're quiet about buybacks this quarter.
Cash was somewhere in the neighborhood of $160 billion. No, I don't see anything about. And I didn't listen to the call, but I read the transcript, and I didn't see anything in there about buybacks either, unless I just missed it.
Can we talk about something important? Can we talk about actual price? Can you throw up slide 1?
Yeah.
For those of you, because I know there's some people here that are in the market to make money as investors. So for those.
Oh, you think this is interesting? Come on.
Listen, for some of us are in the market to make money. I don't know what other people are interested in, but for me, I'm here to profit. And I got to tell you, if Apple is below 183,
it's not.
It's not. But if it gets below 183, it's gonna be nasty. It's gonna be nasty. Grandma's 401k is not gonna be looking good.
These are the strongest stocks in the market. I continue to think it's a little short-sighted to look at a chart like this and think, oh wow, if we get below 183, this is a short. How about if we test 183? That's a great entry.
Yeah, maybe. I doubt it. I think it breaks below 183 and things get nasty. Is that not good for you? Do you not like that?
I mean, it's not a trade I'm looking to make.
Don't make it. Don't make it. Things are going to get nasty without you. That's fine.
A lot of people are probably looking for an opportunity to get into the greatest stock and company in the world. 183 seems like a good level to do that at.
It's not Marathon blockchain or whatever.
I mean, it's been DraftKings in my portfolio. DraftKings with another big save in my options account.
I got to tell you, if this thing loses 183, it's going to be nasty. I don't know what to tell you. It's not my problem. I don't give a shit. Let it go to 0. I don't care. But I'm just saying. Or to maybe 5 trillion. I think it does get to 5 trillion, but how low does it go first? Microsoft failed at those levels. The XLK failed at those levels. Why does Apple not? I don't know.
We need a bumper of something about JC's bearishness.
I don't know. By definition, every time Apple has gone down, it's been a good time to buy. So I don't know what to tell you, honestly.
Okay, great. But what drawdown are you going to sit through?
What'd you say? How much of a
What kind
drawdown?
of drawdown are you going to sit through?
I don't know. It depends on my mood.
He's gonna take a Disney-like drawdown in it.
Listen,
All right,
Apple's had some serious drawdowns that are not for the faint of heart. So
Of course.
you can buy it if you want, but you're gonna buy it without me. I don't.
All right.
Rachel's
Amazon.
calling you unpatriotic.
First of all, one of the beauties of America is that we could short shitty companies that are going to zero, and this isn't.
Wait, what? Time out.
Yeah, stop.
What?
Cut the mic.
Okay. Yes, you can do that. That's not what Apple is.
No, we don't. Maybe we'll be in the future. Remember, at the end of the day, every company eventually goes to zero.
Come on now. All right.
What do you mean? Come on now. It's true.
No, they don't.
Yes, they do. Go back and do the math.
I don't want to.
Every company eventually goes to zero. Deal with it.
I don't know what to say. Can we talk about Amazon here?
Yes, Amazon's a good one.
JC, is this
Amazon not at zero yet.
Is this one? Yeah, is this one a little better for you?
No.
This was a blowout for them. They crushed it. EPS, big beat. Revenue, nice beat. AWS revenue, that's their cloud, nice beat. Advertising beat. Talked about how they've been cutting costs all year. They I think it was a double-digit revenue growth year over year, which is not what they've been seeing for the past couple of years. So it was a return to profit, a return to growth on that trajectory. So it was a good quarter. It was a very good quarter. Good report.
I was doing a post-mortem on this Amazon chart, and I think it was late last year. Meta was working. Google was just starting to work. Apple and Microsoft had been ripping. NVIDIA had been ripping. Amazon was kind of lagging in the big growth space. And we had this clean $100 level. We have it drawn here at about 102 and change. I mean, that was. It had a catch-up vibe to it. Everything else in the space was working. It's Amazon, big mega cap tech company, really clean level. What, you're up like 35, 40% if you got in at that former resistance.
Why don't you throw up slide 1 so we can show what a good short it is?
Sure.
What is wrong with you?
I don't know I'm in the market to make money. I don't know what you're in the market to do. Gossip about irrelevant things like earnings or whatever. Like, listen, there's a ton of support here going back to 2020, 2021, right around that 143 level. It looks like we're running into that this morning. Here we are at 141 and change. I like that short against those August highs from last year. You can call it one. I mean, listen, we got as high as 146, so it's not the cleanest level, but I'd much prefer to be short below 143. So let's see how this trades. Listen, if we're above those August highs, you obviously can't be short, but we're not above those August highs. So I like fading this for a short.
Well, we're at 141 right now in the pre-market, so stock closed at 128.
It's got a little more upside, and then short it, let it go to zero.
What other earnings do we have today? Anything that JC likes?
That is the question of the day. Is there anything that JC likes? What else did I have? Let's talk about
energy.
Coinbase. He doesn't like Coinbase.
I like that golf course we played at yesterday. That was awesome.
Andy Jassy's a great operator.
No relation to Danny Jassy, for the record.
No, but it sounds. I think of Danny every time I say Andy Jassy.
I know. I think he uses that. Like, he doesn't deny it. He's like, "Oh yeah, my uncle."
All right, Coinbase EPS beat, sales beat. If there are other numbers, which I'm sure there are, I don't have them in front of me. There's the chart. Thoughts, JC? You hate this one too?
I don't hate this one. I don't hate this. I don't own it, so I'm happy it can go to zero. It's fine. I don't own it, but I think these ultimately break out. The question is, how long is it going to take? Coinbase got back to those former highs. It failed, right? Classic, very simple. And if we're able to break above that, then it's a long. But I don't know how long that's going to take. Bitcoin starts creeping up above 31,000. If it finally is able to do it, Crypto Friday, by the way, if you want to throw that bumper up shortly.
Yeah, we never did that, and
we never did.
Somebody called us out for that in the chat. We got called out in the chat for that. So
listen, just because we don't start with cryptocurrencies doesn't make it not Crypto Friday. I got my Satoshi hat for golf today. Where's my hat?
Hold on. Let me say, yeah, JC was rocking the Doge hat on the course yesterday. Let me just say real quick, I think the Coinbase call, which I typically like to listen to, probably won't be able to for a few days. It's this morning, right? It should be this morning.
I think it was. Yeah, I think so.
Brian Armstrong, along with Dara Khosrowshahi, the Uber guy, right?
Thumbs up.
I think it's fine.
Good job.
Two best CEOs out there right now. These guys are absolutely killing it. I love everything that they're both doing. And listening to the earnings calls and listening to them talk about how the companies are improving fundamentally has been really great over the past year. So I would check out that Coinbase earnings call if you have the time this morning.
All right, let's put a pin in the earnings discussion. As much as JC loves it, let's bring on today's guest. He's here with us.
Yes,
and he is our secret weapon. At least that's how I think of him. Alfonso, you ready, man?
Let's go.
Okay. Unfortunately, for all of us, I don't have a nice, sweet bumper for Fonz.
Yeah, we don't have a Fonz bumper?
Look,
it's wrong, and I'm not happy about it.
I'm not happy about it either, but we gave the guys very short notice. It will be done today. It's just not done right now. So I'll share it with you guys when we have it. And next time Fonz comes on, we'll actually have a sweet bumper for him. But in the meantime, we'll get him on, bumper or no bumper. Alfonso!
Fonz.
Hey, guys. How's it going?
Too much headspace for Fonz.
Yeah?
Yeah, we can bring you in a little bit. There you go. Yeah, okay.
There you go. So Alfonso, coming from Venezuela, what is your favorite Venezuelan dish to eat?
Arepas.
Arepas.
Yeah,
arepas with cheese or with other things?
Yeah,
with cheese, with beans, with meat, with everything.
So you eat those for breakfast too, right? You can
eat those for breakfast, for dinner, and even lunch. But
late night drunk food. Oh, that's the best.
Yeah, you're right.
There's a place in the East Village called Caracas. That's the name of the restaurant, and it's an arepa bar, and they have all kinds of arepas with all kinds of things. You can get like churrasco with maduros and frijoles, like all in the arepa. The place is amazing.
Where is that? In Miami?
It's in the East Village in New York City.
Oh, okay.
There's also a great place. I know I've told you this before. A really super famous Venezuelan restaurant right in Norwalk, across from Milton's office. That
we got Venezuelans in Connecticut.
Dude, it's good. It's
Who knew?
Really good.
Mm-hmm. Who knew? Yeah. All right, Fonz. So Fonz focuses specifically on equities and some cryptocurrencies, you could say. Yeah. Fonz, what's on your radar? What's on your mind?
He also does a ton with the insider filings every morning. He's got his hands in just about every scan.
Yeah, I'm in charge to run different reports here at All-Star Charts, Follow the Flow, Hot Corner, International Hall of Famers, and most recently, we started to do our Junior Hall of Famers.
Why don't you explain what the difference between the Hall of Famers and the Junior Hall of Famers is?
Hall of Famers are, sorry, Steve.
And explain why did we add this extra scan the other week?
Yeah, Hall of Famers are the largest 150 stocks by market cap. And we thought that it was the moment to expand our universe. So we are starting to filter and focusing on the next 150 stocks, based on market cap. It's going well. I have the table. The most recent table is slide 42. If you can show it, Spencer.
Slide 42.
Slide 42. So this is how it looks. The next slide is a trade that we put on like 3 weeks ago, last month. This is Carrier Global. We put a trade idea above 49. It hit our target at 59 real quick. So I think healthy consolidations around these levels will make sense. But above 59, I like it towards 75.
So This is a building products and equipment stock. It's a big stock, $48 billion in market cap from Palm Beach Gardens, Florida. Who knew?
That's right.
You know, what have been the best patterns, Fonz, this year? You're looking
The
at
best patterns.
Yeah.
This reversal basis, as you can see in that chart, we focused on Carrier Global like a month ago because it was carving out like a reversal base.
Yeah.
Our risk level was very well defined at the 61.8 retracement,
Yep.
and we're focusing on relative strength too, and it works very well for us.
I think we've found this year that the best or easiest trades, at least, have been buying the base breakout. So in this example, it would be buying 49, right? Strength above 49. I think the harder trades have been things that look more like Carrier does now and Apple or Microsoft, and buying the new all-time highs.
Yeah, I agree with you.
And more charts are starting to look like the latter, like Microsoft, Apple, and Carrier there, when, the last 2-3 quarters, they were looking like the former, just fresh base breakouts. So
Yep.
I think it speaks to what stage of the cycle we're at. It's really starting to feel half-timey to me here. But we'll
Yeah,
see.
I agree with you.
Yeah,
But I bring some charts that I would like to explain. Slide number 30, please.
Nikki says, Fonz, the charts have been on point. Fonz has the best charts on the whole team. Prettiest charts, cleanest charts.
You think his charts are better than mine?
Yeah, your charts are sloppy. You're a mess.
Wow.
So this chart caught my attention this week. I mean, everyone's talking about the strength in the dollar and what it represents for stocks. So I'm looking at low volatility relative to the S&P 500 in black, and consumer staple stocks relative to the S&P 500 in blue. These two groups of stocks are defensive in nature,
Yep.
So these stocks tends to outperform when the broader market is under pressure, and the fact that they are holding former lows, it's something that caught my attention, especially when we overlaid it with the US dollar. Next chart, please.
Yeah, go ahead.
This chart of the US dollar and consumer staples on a relative basis looks very similar and speaks of that potential vulnerability that the stock market could head in.
Great chart, Fonz. Great chart.
Yeah,
Nice work there.
In the next few weeks or even month. So both are above support. The dollar print like a failed breakdown. It's now above former lows, and staples on a relative basis are catching a bit. So that's not good for stocks,
No, in fact, if we because we don't have the indexes overlaid on any of these. So just for context, where both of these charts were bottoming, and the dollar obviously bottomed earlier, shown in blue here, than staples on a relative basis. But what was happening to stocks? They were peaking, whether internally, right, or at the index level. If you look at that ultimate low in staples on a relative basis, the indexes peaked a couple weeks later in January.
Right, but that doesn't mean we cannot see strength underneath the surface, So the next chart, for me, it's a good way to see, the second half of the year. So it is the equal weighted sector returns in 2023 so far. On the y-axis, we see the first half performance leading by technology, these growthy areas like discretionary communications. And the axis, we see the second half performance so far. Energy and financials and materials are leading the way so far. So if we're seeing a real rotation back to energy and these value-oriented areas, I think looking at the next chart of energy relative to technology will make a lot of sense. Energy is at a logical level to catch a relative bid and start outperforming. And if that's the case, I really like Marathon Petroleum. That's the next chart.
Yes. Is this your favorite name right now in the energy sector?
Yeah, I mean, I was looking. I will tell you. I will tell you why with the next chart. But look at this chart. We broke out from a massive base.
Yep.
And price has been consolidating right below the 161.8%.
Yep.
And it's trying to break out to new all-time highs. And what I like of this chart is the relative trend in slide 36.
Oh yeah.
Yeah. No. Yeah. That's the chart.
Wow.
So that's a massive base, like a long decade base. This ratio is pressing against the upper bound of this range. So if we break above that former highs, I really like Marathon Petroleum.
You know, and Fonz, why don't you speak to like what you're doing here? We look for confirmation in a number of different ways, whether it's an overbought momentum reading, but one of our favorite ways to do it is getting confirmation from the relative trend, right?
Yeah, that's true.
So like we'll see it a lot where you might get some sort of a nice breakout on absolute terms. Then you look to the relative trend. Oh, wow, we're getting a similar breakout there. It's like it checks all the boxes. I think that's even better confirmation than momentum.
I agree with you. And I bring an international stock that I really like right now. Slide 37 is a Chinese stock.
Oof.
I like this one. I like this breakout, above 41. Yeah. The risk level is very, very clean for us.
So these guys make vehicles, Spencer, right? Because this chart looks a lot different from the other charts in China.
They're probably not making anything. It's probably a big scam, but that's okay.
Well, so they all make vehicles. It's a question of which part of the market do they target. There's high end and low end. I think Neo is higher end, and I think these guys are lower. Or maybe it's vice versa. I can't remember.
$46 billion in market cap.
Just to be clear, I was just over there. None of these cars are on the road. It's just
Dude, they're not making cars. It's a big Fugazi. You know, it's Chinese stock. Like, you don't know what they're doing. So, like, who cares? Like, we can pretend they make cars. Yeah, they make cars. Might as well make shoes, like iPhones, whatever. Who cares? It's going from the lower left to the upper right. Tell them, Fonz.
I agree with you.
Yeah.
Great chart.
Would you short that, JC?
Probably not. I don't like to get too aggressive with these Chinese names, long or short.
Me either.
You know, I like sleeping at night. It's very important. I don't know if you heard.
Yeah, I wouldn't short these Chinese stocks. You might get a knock on your door.
Hey, guys, follow Alfonso. His handle is on the screen there. It's at Alf Charts. He's if you've liked his charts, a few of you in the chat said you have. He posts charts on Twitter all the time, and whenever we say, "Hey, we need this chart ASAP," he's the one that whips it up in a jiffy. And he's a beast, and we love him. And he helps us out. He helps make the show go behind the scenes. You guys don't see it, but
Fonz, you know you're my favorite, right?
Yeah, I know.
All right.
I thought I was your favorite.
We can't tell the other guys.
See you, Fonz.
Bye, guys.
Bye. Can we just like talk about all these bad takes in the chat, or should we wait? Because why don't you guys tell us?
You don't like they like Fonz's hair. You think that's a bad take?
No, that's a great take. I'm on board with that one. Why don't you guys tell us what else is unpatriotic? Let's make a list.
I think they're just breaking balls. Like, they don't actually think it's unpatriotic.
I don't think so.
I think they're just messing around. Like, this guy, somebody said that my charts are as ugly as my golf swing. That's man. I have a really bad golf swing.
Take great offense to that one. All right.
Is it that bad? Damn.
No, the practice swings are really bad though.
First of all, I never claimed to be good at golf. I specifically told you how bad I was, actually.
And we told you we were going to make fun of you anyway. I'm just as bad.
Fair. Bring on Kimmy. Let's go. Let's make some money. Great charts from Fonz.
Yeah, always.
Kimmy Sokoloff, happy Friday.
Oh, thank God. It's a long week.
Listen, for somebody who's talking about how difficult this market is, a 5 for 6 yesterday, Kimmy, crushing it again. Printing money.
So I don't always hold stuff through earnings. Amazon did well. Apple did not. And 4:15, I had to run out. I lured the room. I was in my car, 4:30. I saw Apple pop. I didn't get to put it in there because I already left. I saw Apple popped at 4:30, and I was looking for it to go back to 198 and 200, right? If it did well. Earnings, it's 50-50. Either goes down or up. It went down. So I saw it like at 194, then 195, and I just hit sell. I was just like, I just don't know if this thing's going to go, and I'm going to be driving. I don't have time. So it's like I always tell people in their room, they got to manage their own stuff. It popped up to 196, like 10. I was able to sell like 195.70 or 65. I got to look. I think I sold at 70 cents, and I just sold it. I mean, I was small because I knew earnings were coming up. I don't, so I sold out last night, and then I lured the room at like 7 something at night because it doesn't.
Kimmy, credit to you for not trading and driving, for being responsible.
Yes, I got in the car because I said I had to go, and I saw a pop. I go, I'm getting out of this. I took a loss, but whatever. It is what it is. We'll see, Friday's option expiration. We'll see. What do we have? Payroll. We had some numbers. It was down. Now we're up.
Boeing on the radar. Can you walk me through this trade, Kimmy?
I was gonna ask about that.
Yeah. So we got to see if stocks get a push today, right? We've got to see if they want to push this market up today or not. I think it's kind of dicey. With everything going on, August is typically bumpy, which we know. I saw your morning note, JC, saying about this is the weakest part in pre-election years, right? Weakest month, so, right?
I mean, you read
so what
my
I'm going to
notes.
look
I
for.
appreciate that, Kimmy.
What?
I like how you read my notes.
I just saw it this morning. I was like, oh, yeah. And so we'll see if it holds on to 230.50, 230.60 or so, if it could pop back up to 235, 236 or not. It did well during earnings, pulled in. It could potentially be flagging, but a flag could break down. So you got to just put your stop in place, right? That doesn't mean it gets going today. It might need more base time, but it's something to watch if it gets moving,
What do you think about the overall market here? I continue to think that the back half of the year is going to be much more bifurcated. Individual winners at the stock level, at the sector level versus at the index level. Are you seeing that? Are you seeing something different? Do you think the indexes keep grinding higher? And I don't want to say like the back half of the year. Let's talk about August specifically.
Right. No, I think August, could continue to be choppy. Maybe the spies go down to 440 or so. Can
you tell me about your experience with like portfolio managers throughout your career on the institutional side? Like, how was August? Were they on vacation a lot? Did you not experience that? They actually worked a lot.
The big guys go on vacation, but the computers are with them. They're managing money. So no, I was working every day.
Specifically, but what about the clients? What about the PMs? They were in the Hamptons, or they were working, or both? You're saying
they were on, like in the Hamptons or the Jersey or wherever they were, but they had their docking stations. They had their Bloomberg in front of them. They were working, so their family was out playing. They were in front of their computer. When you're managing, $500 million or $250 million. You're not sitting on the beach. Yeah. You're just not, unless you're like a mutual fund, but hedge fund managers are like kind of in front of their screen. Yeah. Listen, markets do slow down on Fridays. People go to the beach. Like they start like by 12 o'clock, they're done. Fridays they probably, that's when they really like take off. But during the week, they're in front of their computer. They might not be making as big moves or whatever it is, but they're definitely always watching. They're not leaving it unless they have assistants near them watching the market for them. They're not going too far.
All right. Well, I'm here. I'm ready to go. I got my account ready to go. When you start firing up the trades, I'm in there with you, Kimmy. Let's go.
Yeah, we'll see. We had some earnings like Net, TD. Net did well. Trying to see how it handles the 70 level this morning. I can't. Oh, sorry, gapping up. It was pulling in.
It's up 10%.
I got Airbnb, not so good. So we'll see how that goes. I'm watching a couple names in here.
Yep. All right, guys. If you want to join Kimmy's room, there's the link. It's on the screen. It's in the chat. It's in the description. I'll put a QR code up as well. Also, Kimmy sends out a note every morning and every afternoon of what she did. Like in the morning, it's what I'm doing, what I'm watching right now, and in the evening, it's what I did today. If you want to get that note, email us questions@stockmarketmedia.com. Just say Kimmy's note in the subject, and we will get you on that list. But if you want to join her room, actually trade with her, make some money. Don't just like hear what she did after the fact. Actually be there as she's doing it. Use the code on the screen. Use the link in the chat, link in the description. Kimmy, have a good one.
Have a
Nice
good
job,
weekend, guys.
Keep it up.
Her winning, her track record speaks for itself. Her win percentage speaks for itself.
Crazy.
So,
I've never seen anything like this, and I'm not like sheltered. Like
I know
a lot of traders, like a lot in this world. And man, I've never.
I think if you are like if you're a day trader and you're right 51% of the time, you're probably a really, really good trader. And she's right way more than that.
Pushing 80. Pushing 80%.
Yeah. That's good stress.
Over a year period since September of last year. Insane.
Yeah. So, okay, let's go back to the earnings. DraftKings. Where's my DraftKings chart? Let's get that up on the screen. It was a beat and a raise. They raised their guidance. Look at that.
Are you still in this, Strazza?
Yeah, I'll talk about it because I think it's a good lesson.
You don't seem too excited about it.
I'm not.
Up 12% pre-market.
Because I picked the wrong strike when I was rolling my calls at 4:00 in the morning from Tokyo. So do we have the zoomed in chart? So we're trading around 33 and change this morning.
Is that this one or no?
No, we got to zoom in.
All right. 1 second.
I rolled my calls, and as JC likes to remind people, tend to keep things pretty aggressive. So I went out of the money again when I was rolling. I hit I think I own 32s also, but not in the weeklies. 33s and 34s. I'm going to lose money on these 34s, it looks like. So, options are tough, especially the shorter you date them. And these things happen. Speaking of win rates, my win rate is like 30% for that reason. But when they go, they go. So
it's all about, it's not about how much you make on the winners. It's about how much you lose on the losers, right?
It's probably a healthy dose of both of those.
Yeah, maybe. Or don't lose on the losers. Okay, this is the big winner of the morning at Atlassian. Ticker team. What are they up now? Last I checked, at least it was the big winner. You can see the EPS and the sales beat on that one. What's the stock up now?
This has been a monster secular leader. I don't know. This is software, I believe.
Australian software.
No. It's not Australian. The company was founded in Australia, but it's like
based in Sydney. Is that not in Australia?
But
is that in New Jersey?
It's not like they're not in America. Like I've used Atlassian. I use Atlassian software right now.
What is it?
They have I think Trello. I think they bought Trello, which is a project management software that I use to keep track of all the crap I have to do. They have I think Jira is their big one in that whole software suite. So I've used it before. It's very good, I think. And
so because Spencer uses it, that means it's not Australian.
No, I didn't say that. I said it's like they're founded in Australia. The founders are Australian, but it's not like they're not in America. Like their business is in America, right?
Yeah.
Well, this chart is actually made by Australian software providers, and here we are in America using it. Is this company not Australian either? Optima.
Okay.
All right. Give them a break.
Here's what's interesting about this one. If you zoom out on this chart, this has been a secular leader in technology for a long time now. What was it, down 75, 80%? I'm just guessing based on the chart, but 80% drawdown in a name that historically is one of the best stocks and one of the best industry groups in the market. If you did know about this company or knew the fundamentals, maybe this is some sort of bargain down here. At least it feels
it's up 22% pre-market. So, it was maybe yesterday.
A lot of these tech stocks were absolutely destroyed. And it's still a long, long way from those old valuations that they had. A lot of people will tell you that, we'll never see those valuations again. I think that's crazy. I think we will see them again. We'll see them a couple times again.
Listen, if the market has taught me anything, it's never say never. I've seen some shit, man.
Yeah, so DraftKings own the common too, for sure. But love to add that juice after the base breakout. So been rolling these calls. What's the move here, JC? Do I roll my current calls again today, or do I just finish this? Because I would think with a bar like it looks like we're going to have today, and really I think the answer is wait and figure that out at 3 o'clock from the golf course. But with the candlestick that we're going to have today, based on the pre-market, you would think we'll get some follow-through Monday, Tuesday of next week. But, you know.
You're going to be trading from the course today?
It's Friday. I'm going to have to at least close some things.
I don't want to hear any excuses that you're playing poorly because you're busy trading, all right? I don't want to hear any excuses.
This is the guy who yesterday out on the course kept checking his quotes. He's like, isn't this what we're supposed to do out here? He's having so much fun.
Well, Strazza was like checking his Slack. He's like, I feel so naughty. Because like we don't like go out and play golf like during the day. Like Strazza will leave like maybe a little early in the afternoon sometimes down in Florida, which is probably more than me. So the two of us taking the afternoon off 2 days in a row.
Yeah, we don't do this. This is not.
We don't do this. It was nice though. It did feel a little naughty.
It was great. So someone just asked what my favorite golf course in Florida is. It's called the Key West Golf Club because it is perfectly terrible and in my backyard. So that is my home course, and that's just about where I always play because the next course is about 3 hours away.
You guys want to look
I didn't realize it was that far.
Miami.
Wow.
Hey, you're not golfing in Homestead, my friend.
You want to look at
I don't
Airbnb?
ever want to be in Homestead ever.
You want to look at Airbnb real fast? I came so close to selling this thing a couple days ago, and I didn't. I think it's flat. I think it's flat this morning. They reported last night.
Flat? No movement? Really?
Well, when I say flat, I mean like it's been volatile, but it's settled at it closed at 140. We're at 141. To me, that's flat.
I like this one, guys. I've been talking about it, been looking for an entry, and it looks like today is pretty good.
Why are you looking for an entry so bad?
I didn't buy enough of these growth stocks last summer and last fall on these massive drawdowns. This is long-term stuff.
This is a mess, dude.
No, this is a great brand. I think for the long term.
Well, in that case,
all the time.
Chart's a little. I'll give JC that credit. Chart's a little bit messy. Yeah, no doubt about that.
A little bit messy. This thing looks like this one looks like my golf swing.
The base, you had a false start there that kind of does make the base look messy, but I don't know what the problem is. You got multiple touches here at this 130 level. It's a clear polarity zone. I like the name. I like the name for the long term. Yeah, similar to Uber. Same kind of story for me.
You can have it.
Wait, 3/4 says it's expensive. You talk about the stock or the service or both. Maybe you're talking about both. I don't know. What else did we have? DraftKings, Atlassian, Fortinet, and then here's that zoomed in chart if you wanted, Steve, on DraftKings.
Yeah. So this is my point, right? When I was rolling my calls last week, I was thinking, okay, we get this little bull flag resolution. I'm going to get follow through. So 33, 34, let's go out of the money. Give me that juice. And, despite the stock being up since I rolled those calls and resolving higher, I'm going to make no money on those 34s and not that much on the 33s. So that's just, if you're going to trade these short dated options, you have to go in knowing that you're going to lose most of the time, even when you're right.
Is there anything else that you want to talk about in earnings there, Spencer? Or can we get a little crypto Friday?
Yeah, I'm done with the earnings.
Is that why you wore orange? It's a little more of a little. We need more orange on this show.
So Spencer, we get to dinner last night and we sit down and the bartender goes, "Did you guys coordinate this? You're both wearing blue shirts."
We were together all day. I didn't realize it until I got called out.
I called him and told him to say that.
So we.
What happened?
Oh no, I just cut Steve off.
That's okay.
All right,
that's all right. You can do that more often. Can you throw up slide 19 there on the old Bitcoin?
Oh yeah, and also after this we gotta get Ian Cully on. So let's work through this. Okay, slide 19.
Slide 19. This is the old Bitcoin. We have former support back in 2021, as you could see that. We broke last year, returned to the scene of the crime earlier this spring, and are now failing once again at these levels. You got your anchored VWAP, your volume weighted average price going back to the all-time highs. You got former support turning into resistance, big levels, big levels. I want to put on serious size if we're able to break out above those levels. So far, we have not. And why don't you zoom in to the shorter duration? Here we're looking at 4-hour time frames. Let's remember that the market, stock market, trades approximately 31 and a half hours a week on average, while Bitcoin trades 168 hours a week. So when you look at daily time frames on Bitcoin, you're getting about the same data that you are on the weekly time frames in the stock market. So if you're looking at 4-hour time frames on Bitcoin, you're essentially, it's the equivalent to the daily time frames in the stock market, as far as I'm concerned. So this is essentially like a daily chart on Bitcoin. And what are we seeing? We're seeing support throughout the last couple of months and a breakdown, and we're still stuck below that broken support, below overhead supply. We looked at the longer term chart before that reiterates just how important this key level is. As long as we're below all of that support, it's tough to be overly bullish. A couple days ago, these Fitch people downgraded U.S. debt. Bitcoin rallied on that news and failed. So, you know, that's not a positive, right? You got to see him stick it. You got to see him stick that landing. We start getting above 30 and really holding above 31. I think it's off to the races. We could rip right to 100,000 potentially. But the question is when. And as long as we're below all that broken support, when is not now.
All right. It was that. I think that was oh, here's the seasonality chart.
So from a seasonal perspective, this is the worst time of the year for Bitcoin. Interesting. Granted, we don't have exactly the most amount of sample size here. So just understand that we're working with what we got. And nevertheless, you know, the data is the data, and this is historically a weak time. So let's see if the market bucks that trend. Because for me, I really, really like when markets, regardless of the asset class, do really, really well during a seasonally weak period, or perhaps act very poorly during a seasonally strong period. That is really when I like to focus extra attention. Why don't you throw up the Ethereum chart there on slide 24, showing that Ethereum has yet to break out of this monster base, but monster base nonetheless. I like it. And then we got a chart of the Mara. Why don't you throw the Mara? This is my preferred vehicle of choice. I know Rachel earlier was like, we pretend that MicroStrategies does things. No, we don't. We know that they do nothing. We're cool. We're cool with that. Yeah, we don't have to pretend. It's all good. We know.
They do exactly what we want them to do.
They do what we want them to do. That's right. They're doing what they have to do to continue to be the de facto ETF for investors. You know, people want vehicles to express a bullish or bearish thesis on Bitcoin. You got it, right? What do you need an ETF for? You got it already. Here's Marathon. This is a big one for me. If we start breaking out above 20, I'm flipping the book, going all in on the Mara. But not yet.
Well, I got a little update here. Was able to manage my way out of those DraftKings 34s. Just got filled at 80. So not bad.
Heyo.
Very nice.
Heyo.
All right. Let's bring you Mr. Ian Cully on. Talk a little bit about rates. We'll tease our conversation we're going to have a little bit later on what to think. But Ian's here. Let's get him on.
Good morning, guys. What's happening?
Ian's got the best bumper of the whole crew.
Yeah, he does.
Who's got a better bumper? The Crypto Friday bumper is pretty cool too, though.
It is.
I like
the hot corner
also
bumper.
very
I
cool.
like it. It's so hot.
And Kimmy's bumper. Come on now.
Oh, that's true. Okay, fine. We do have we do have. I just like the baseline, you know, on Ian's bumper. I'm into it. All right, Ian, you playing golf these days?
Not enough.
I don't. I'm not a golfer.
Aren't you
Hey,
from Hawaii? Don't they play a lot of golf in
sunshine.
Hawaii?
I like getting out. I've been on the course before, but I'm not much of a golfer.
All right. Well, I golf now. It's my new thing. I'm a golfer.
We'll make
I know, and I mean, I saw the swing. I think if you're not in the fairway, I mean, we can play together.
Dude, I'm terrible.
I can at the very least tag along.
I think I'm getting worse, actually.
JC was consistently hitting fairways. As funny as that video is, it's not representative.
I believe it.
Par 2 holes on the front 9.
Yeah, he played well.
Wow.
No, Ian will be our next convert.
All right. Nice.
How about those? How about those pictures from New York City that Giancarlo dropped?
Oh man, what a night!
Amazing.
What a night!
So,
in Paul Wankmuller and Mark Newton, we still ping each other and laugh about that.
Is that when you guys were singing karaoke at the gay bar?
yes,
yeah, all night.
Why were you singing karaoke at the gay bar?
I didn't pick the bar. I think Mark Newton picked the bar. We just followed.
Everybody. Yeah,
We didn't know what it was, and people were.
Yeah,
like,
you did.
No,
you did.
people
And you
were
loved
like-
it. And you loved it, and they loved you.
They loved us. People were coming up to us outside, like, because we brought like a group of like 30 people, and somebody came up to us outside and was like, "You guys know this is a gay bar, right?" And we're like, "We do now."
It's one of the gayest bars in the world. Not that there's anything wrong with that. It's just remember where you are. Anyway, nevertheless, Ian Colley coming to us, head of fixed income commodities and currencies of All-Star Charts, and I always have a lot more questions than answers when it comes to FIC. As does most seasoned vets around here. It's tough to call these yields, man. These yields. Is this for real? Are these large speculators actually going to be right?
Great chart.
Yeah, thanks. I don't know if they're going to be right or wrong, but you guys really nailed it earlier in the show during the market rundown. Is that this isn't something that I'm crazy about trading.
Yeah.
The underlying trend for yields remains higher.
Yeah.
This is a tight consolidation that is resolving higher again in the direction of the underlying trend. But I'm not crazy about shorting bonds all the way down here. Doesn't mean they can't go lower.
Yeah.
It doesn't mean they can't go lower, but they're just far better opportunities to trade. I think there's going to be a great rotation. We're already seeing that rotation into more cyclical areas of the market. If you zoom out a little bit on this 30-year yield chart and show, again, underlying trend is higher. And what areas of the market are going to do well as yields rise? Commodities and commodity-related stocks. So I think that's where the focus, needs to be, heading into the holidays. And we're seeing it. Fogg's bringing the heat with those energy stock charts. I mean, that's where it's at. And here's the 30-year yield. Now flip to the next chart. Looks almost exactly like XLE.
Yep.
So I think that's the play as yields continue to rise, not shorting bonds.
Ian, is there a cleaner commodity? Go back to the live cattle chart. Is there a cleaner, more orderly uptrend off the 2020 lows in your entire commodity universe than this? I mean,
no, and that's why I keep using the live cattle chart. So I've used this a number of times. It's just the best representation.
Hey,
why are you using live cattle and not the feeder cattle?
It's just I like it. It's a better chart in my opinion. They both look good though.
I was gonna say, yeah.
what about the dead cattle, as Rachel's asking in the chat?
That's the feeder cattle.
Okay. Hey, bullish beef. I like it.
Yeah, we were eating good steaks yesterday. Strazza doesn't like flavor, so he ordered the filet mignon last night.
JC made a scene in the restaurant when I ordered my steak. You're not gonna get the Wagyu?
I mean, they got Wagyu. Why would you get the filet? I don't understand.
What kind of sauce did you get with the filet?
I got a mushroom sauce and it was nice. It was really nice. I should have got the Wagyu, but it was my steak was delicious.
Nice, huh?
We ate too much. I don't know what you think you're gonna do with that carrot cake, but I was thinking about it this morning. I was like, I wish I took a bite, man.
You didn't take any bite of the carrot cake? The carrot cake was the size of my head.
I was ready to explode already.
Ian, can we talk about energy here? Washout. I shouldn't say washout levels in commodities, but pretty pessimistic in commodities for sure. And Crude oil inching higher, just not able to break down. When you look at these crude oil, I mean, they had every opportunity in the world to break down. Couldn't see it. Could back half of the year energy is the leader?
I think it's a real possibility. I mean, I don't know where price is going to go, but just by looking at the charts and studying the last, even just a year of price action, it seems like that's where things are heading, especially with
big
rates.
Stick in oil yesterday.
What's that?
Big stick in oil yesterday.
Big stick in oil. And even looking at commodities relative to bonds, I mean, that chart looks like, that's ready to resolve higher. So that big trend off of the 2020 lows, that big shift towards commodities outperforming bonds and just outperforming even stocks, it's still in place. And
is that why rates are inching up?
I don't know why rates are inching up. I'm not great at the whys. I'm more focused on the path of least resistance. And right now it's higher for both rates and many of the.
And what about the 10-year break evens inching higher? Inflation protected treasuries outperforming.
Absolutely, and those are all patterns that look like potential tops. And they're not looking like tops now, So,
what's your favorite? And what's your favorite non-futures way to take advantage of the back half in commodities?
That MPC chart that that Fonz shared earlier.
Dude, you and Fonz love the MPC. I like it.
The relative strength is off the charts. I shared it last week in one of the posts. It's such a strong stock on an absolute basis and relative, not to the broader market, but to energy. So this thing's up 30% in 2 months. You don't like maybe something like Valero or something?
Valaris
looks good. Valaris looks good. But no, I think this thing, it's resolving higher. It's outperforming the rest of the sector. I like Marathon, but there's a lot of names in that space that I really like. Sean just put on a trade for PXD, Pioneer. Yeah. It's already starting to work. That one's looking good. I like for midstreams. I like AM is the ticker. It was Antero.
Let's be serious, Ian. If energy goes, all of these are going to work.
Right. So again, it comes down to finding relative strength. What names, what tickers are outperforming the rest of the space, and that's why I like MPC, because I not only want to buy the energy stocks that are going up on an absolute basis, but the ones that are outperforming the energy space, not just the broader market.
And you want juice, right? If you have conviction that it's going to be energy for a while. Why do you guys hate my Valaris warrants?
Nobody hates your Valaris warrants. I don't know if any of us love it as much as you do. You seem to be really very much enjoying it. I got no problem with your Valaris warrants. I like energy here. I'm with you.
You're not still in those Oxy warrants, are you?
I'm not in Oxy warrants. I have an irresponsible amount of Chevron calls, though.
Yes.
So indirectly, I'm in the Oxy warrants indirectly, I suppose.
There's a number of ways to do it. We could do a postmortem in 3-6 months and I'll take a look at how much we made.
The three of us and Fonz, throwing Fonz, the four of us are all agreeing on energy and we're taking advantage of it all in different ways. Maybe Ian and Fonz are on the same page, but generally we're all doing completely different things here, right? I like that. That's cool. That's cool.
Ian, any particular reason why the euro is doing what it's doing this morning?
I haven't checked the news feed yet, but the dollar in general is starting to roll over. The Kiwi is starting.
If that dollar rolls over, these stocks are going to rip, baby. The bull market is back.
Hold on. Did this have anything to do with the jobs report they're talking about on the TV in front of me?
Are they still doing
what report? There's a jobs report?
Spencer, how come you didn't talk to us about the jobs? Come on. The jobs.
I was going to, and then we sort of got
sidetracked into actual
mentioned it at the top of the show.
I mentioned it, and then I never circled back around. So
this show is about making money, not about gossiping about people's jobs. Who gives a shit?
But what about the farm payrolls?
Yeah, nobody ever talks about the farm payrolls. Why is it all the other non-farm stuff?
It's just, yeah, I mean,
I want to know about the farm payrolls. Can anybody give me that number? Strazza's right.
They're not on the books.
Yeah,
That's
they don't have
bullshit.
books. It's hard. They got like 15 kids out in the field. And they're all underage.
That's actually probably right. That's actually probably the reason.
Hopefully they
I'm
have
not
all their
kidding.
fingers.
Yeah, of course. That's why they have so many kids, so they have more workers. That's true. That's a
Yeah,
true
no,
story.
yeah, absolutely.
Oh.
Yeah.
Oh, I thought he meant just the illegal immigrants. That's what I thought he was referring to.
A little bit of that too, probably.
The next person to talk about Bill Ackman in the chat's getting booted.
Yeah, who cares?
Who?
And by the way, we are animal protein eating investors here on the morning show. We eat animal protein. The more animal protein, the better. You could be vegan. You don't have to eat animal protein. That's okay. We get our foie gras and we spread it on our ribeyes and we eat it with a nice Cabernet Sauvignon, nice little Bordeaux, you know?
Almost got the bone marrow last night.
Yeah,
Troy
on
Aikman
your
or
ribeye last night?
No. But if
No.
you go to the strip house in the village, they'll put foie gras on your ribeye.
Oh my gosh.
We should go. It's
Yeah,
awesome.
We should.
Yeah.
Casey, you know, why don't you express your bearishness through shorting Beyond Meat? Why you got to pick on Apple?
Bearishness on what?
Beyond Meat.
First of all, I'm not short Apple.
Wait,
Who's short
Did I
Apple?
mishear that?
can I
Oh,
just say,
below 183. Below 183.
speaking of Bill Ackman, I just saw that Carl Icahn stock IEP down 34% here, and it's because they're doing another. I guess it's their equivalent of an offering, or no, it's a distribution.
It's not a real stock. You can't touch this thing.
Yeah, it's not a. Yeah, it's a $1 per share distribution.
This is a disaster.
This is a disaster. This is a complete disaster. Can we do some hot corner, please? Come on.
Oh yeah.
Yep.
Where is the hot corner?
We got a sexy one.
All right. Do we? I'll be honest. I haven't even seen it today yet.
Oh, maybe you should take a look.
I need to. Well, I'll do it right now. So where's my hot corner video? Let's go.
Hot corner. So hot right now.
So sometimes we get piker transactions coming across the tape. These are small, just 100,000 here, 200,000 there. Not really that exciting. Today we got some big hitters dropping some loot on some of these stocks. Is this Exxon, this Jeffrey Ubben, is he buying more or is this the same filing as yesterday? This is more?
Yeah. Pretty sure.
Wow. It is a lot of money. Like, is this $20 million? Is that nothing these days? I mean, it's a lot to me.
I mean, dude, what is their AUM? They're huge. This is Value Act Capital. So I think it is a pretty large position. We could check. Haven't really been in the office, but these are back-to-back Form 4 filings, Value Act adding to their position. Exxon at a very, very key level. I'm sure they have some technicians on staff, even though it's a value shop. Maybe somebody's looking at a chart over there. It seems that way to me. Don't run and get your Crocs now, Spencer, but another Form 4 filing from Crocs as well.
The hell's going on over there, man?
2 directors. I don't know, man.
Somebody knows something, or they think they know something.
Hey, shout out to Joey Agri buying his own stock here. Agri Realty. If you ever want to get them on the show, we can do that.
Yeah. So
Yeah, is that your homie?
I mean, he's not really my homie, but yeah, I've talked to him before. It's a Detroit-based REIT.
So this is Detroit commercial real estate.
Yeah. No.
I'm real interested in that.
They're based in Detroit. I don't know where their footprint is. I think it might be.
I don't know what
Greater
these guys are
Michigan.
doing, but they're doing something right. It looks better than any REIT that I know. Right?
Hey, Detroit's on the upswing. Detroit's on the turnaround.
Well,
right?
couldn't get any worse. Have you been to Detroit?
No.
Basing pattern completed a long time ago in Detroit.
Fine. Nice pushing 5% yield on this one. Listen, Detroit or otherwise. I mean, when you go REIT by REIT, none of them look this good. I mean, this is.
You're talking about ADC? What are you talking about?
Yeah, ADC.
Wait, where's my?
I don't know what you're looking at. I would short this thing below 62. This is a disgusting looking chart.
All right, listen. Whenever in doubt, zoom out. Take a look at slide 1 there, Spencer. Haters gonna hate. Haters gonna. What is it? Taylor Swift. Haters gonna hate. Right? You know.
I think you're looking at your charts upside down this morning. I don't know.
I think you're looking at your charts a little too short term. Actually, why don't you zoom out for once in your life?
Yeah.
Is that how many REITs look like that? Paying 5%. Boom. How you doing?
All right.
How many REITs look like that?
No, that's fine. You're right. Look, structural trend is very much up. So
It ain't down.
You know, TradingView doesn't let you zoom out enough on the daily. When I zoom out on a daily, I can only get back to like 2016. I need more than that. Well,
It drives me crazy.
Optima. You could zoom out forever on a daily chart. It just flips it to a line for you. Fun fact.
Just saying. Looks great. No big deal.
It's an Australian.
Can we do a little? Where can everybody get the hot corner? First of all.
Oh, good call. Should probably mention that. If you want the hot corner, it's a free daily note, guys. Free keyword there. Goes out every single day, Monday through Friday, in your email in the morning. It's like one of the first things that I normally read. Today is an exception, but it takes like 30 seconds or less to actually consume the whole thing. And we talk about it all the time. A million reasons to sell, only one reason to buy. So we do this every single day. If you want the email delivered to you, email us and put a hot corner in the subject. I'll put the email up on the screen right now. It's just questions@stockmarketmedia.com, and just put a hot corner in the subject, and then we'll get you on the list for that.
So these directors at Crocs are out here buying $1 million plus in shares because of the SpongeBob Crocs. I like that take. It's definitely not because of the hippie hey dude shoes.
Hold on a second. They're buying this because of the SpongeBob SquarePants Crocs.
It makes.
I'm being wildly facetious.
Oh,
I've heard.
Be surprised. I've seen Stranger Things.
Yeah, me too. That's what I was going to say. I've seen Stranger
Wouldn't
Things
surprise
too.
me at all. If that was true. SpongeBob SquarePants Crocs, huh? I'd rock those.
Yeah.
Spencer has a pair.
Definitely.
I do not. All right, chart report.
Yeah,
let's do it.
Let's take a look. See how
quote,
we doing
great
there.
Quote in the chart report.
I got to scroll down to find that now. Okay.
We don't have a bumper for this.
All right, chart report. Great quote. Divergences are like laxatives. You never know if one is enough or two is too many.
That's great.
Great quote. Who is it? Justin Mammis. I don't know who that is, but that's funny.
Yeah, Pat does a good job with the quotes. He's got a file that you should share with all of us of just quotes forever.
I also like. I actually made the top 10, so that's cool.
I'm getting so tired of this segment where JC just talks about his own charts.
I'm not talking about it.
Here, chart of the day.
I'm not the
Dollar
chart
index.
of the day. No, I'm not the chart of the day. I just mentioning that
I know.
I made the top 10. I'm sorry that you didn't make the top 10. You know, you don't have to be upset about it. Maybe if you had better charts, you'd make the top 10. I like. I just wanted to show Willie's chart. Shout out Willie Delwich. Get him back on the show, by the way, Spencer. AAII sentiment survey. We were talking about it before. Fewest amount of bears in 2 years. Oh my God! Remember last summer these like perma bear Twitter spaces where like all these old guys would sit there crying about how terrible the world is and like, remember?
I do.
Where did they all go? They all like disappeared.
They literally don't have those spaces anymore. You're not wrong.
Wow.
Yeah.
Man, that was some depressing shit, man, last summer. Remember that?
So much anger.
So much anger. What are they so angry about? Like, cheer up, man.
Seriously.
Anyway, it's funny because there were so many bears last summer. They even had like their own like spaces where they would just cry the whole time. And now we have the fewest bears in 2 years. Now, where was that last summer when you need to be buying stocks, which is hilarious. And then the last one that I wanted to point out was the we talk about yields a lot here, but John Roque over at the Chart Life talking about the, what does he call that base? The Burgundian?
It's like a Lord of the Rings reference or something.
I don't know what he's talking. Is that what it is?
Some weird one of those.
I don't think so.
John Roque is a good egg. I don't know what the hell he's talking about with this Burgundian base thing, but
it is.
Other than that, he's cool.
It's Lord of the Rings or what was it? The Hobbit? It's something like that. Patrick knows.
John Roque. He's the man.
The best-
No, it's I think it's Gulliver's Travels.
Same thing. So, who has better sports references, John Roque or Todd Stone?
It's a good question.
Tough.
That's a good question. Both of them do a hell of a job.
Yeah.
Hell of a job.
Can we look at Frank's chart quick?
Frank Cap?
I saw a base. Somebody was scrolling. I saw a base.
Oh, that's a regional bank's relative.
Ah. Wow.
Regional banks relative to SPYs.
Something there. Are you buying the regional banks yet? I haven't.
I don't own any regional banks. I got no exposure to financials here, which is probably a mistake.
You could trade them. I wouldn't want to own them, but you could probably definitely trade some regional banks right now to these bases.
Yeah, you're probably right. Yeah. We'll do some work on that over the weekend. We'll do a little, speaking of which, tell everybody where they can get the chart report, and then we'll do a little quick recess.
Oh, just guys, easy. Go in the description or scan the QR code on the screen. It's free. It's every day, and it's one of my favorite things I look forward to. It's in the evening. It's usually around 5 or 6 p.m. Eastern, and I look forward to it. It's one of the things I read before I hop off. But it's a fantastic compilation of all the best charts from around the world of FinTwit. So check it out. QR code, link in description. All right, let's do some quick recess, and then we'll hop. Where's my recess bumper? I gotta find it. There it is.
I got a question. How come when you hit a bad shot in golf, you have to yell 4? Why not 3 or 5 or 7? Why 4?
It's 4 spelled Fore.
Why?
I don't know.
Okay, so it's not the number 4. It's Fore.
I'm sure the chat knows. Someone in the chat definitely knows.
Anybody
this.
know? That doesn't make any sense to me at all.
It's got to
I
be
was
like
just wondering.
Like, also think about it. Might be.
By the way, we should probably yell that more often, considering some of our shots. For the record,
I thought I was going to hit you on that approach shot yesterday. I had to yell 4.
Did you?
Yeah, you weren't paying attention. You didn't even hear me. I whispered it. It might be like an old English thing too. Like golf is a very old sport that originated really over in like Scotland and Britain. So I don't know.
We went to a Scottish bar yesterday. That was cool.
That bar was great. That bar was really cool.
My family loves it.
I feel like heads up is more appropriate.
It's just so long,
right? Heads up.
It's got to be quick though. Like sometimes I'm just like,
We got like 10 different answers. Watch your forehead. 4 means forewarned. It's shortening of for caddy. Everybody's got a different answer.
This reminds me of the great Mitch Hedberg joke. I played golf. I never got a hole in one, but I did hit a guy.
What is Carl Icahn? So I met Carl Icahn once in my entire life, and somehow we're talking about golf. I have no idea why. And he tells me that if you shoot over 90, you have no business on a golf course. And if you shoot under 90, you have no business.
Yeah, that's good. All right, look, somebody just texted me. 4 caddies were in charge of watching the golf balls, which we kind of need out there, and indicating where the golf balls landed to let the 4 caddy know when the ball was being struck. The golfers would yell out 4 caddy. Eventually, the caddy part was dropped, leaving just the 4.
Wow. Fun facts today. Dropping fun facts here on the morning show. No big deal. No big deal.
All right. My recess is JC. You know what I'm doing tonight? I'm crossing a bridge.
Oh, he's doing it.
I'm going on the Bronx, going to the Yankee game. I'm honestly not very excited because the Yankees suck, but what are you going to do?
Yeah, it's a good ball game. Get some peppers, got a brewski. No big deal.
Yeah, that's it.
No, go eat at Arthur Avenue after.
That's what I should do.
Seriously.
Or beforehand. That's what I should do. You're absolutely right. Yeah. Okay.
I think you should just go to Stan's and crush beers and Jameson's.
I've never actually been to Stan's.
Never been to Stan's?
I've never been to Stan's. No, I walked past it a gajillion times. And
How have you never been to Stan's? What about Billy's? Never been to Billy's either?
No.
Are you kidding me? What kind of childhood did you have?
Deprived, apparently.
Do yourself a favor. Go to Stan's before the game. Go to Billy's after the game. Forget Arthur Avenue. Go to Arthur Avenue on Sunday.
Oh, my God. Forget Arthur Avenue. Go to Calandra Cheese.
First of all, he's going to the Yankees game. So Arthur Avenue ain't going anywhere. I don't know if you heard. It's been there for a long time. Go on Sunday. Have a nice lunch, you know. They don't serve fish on Sundays, which is I love that.
I would rather go
All right.
Avenue than the Yankees game.
Ian and I will be back in an hour and a half for What the Fick. We sort of hit on the rates thing a little bit. We're going to talk more about that coming up on What the Fick today, so stay tuned for that. Thank you to everyone in the chat for participation. Oh, new graphic. By the way, if you're on social media, which I bet you guys are, you should follow us. Follow us on all the social media places.
Wow, that's great. That's a great slide there.
Shout out to Izzy for crushing this one, right? We're on Twitter / whatever the hell that thing is called, at StockMKTTV. We're obviously on YouTube, which you're watching us on. Instagram, we're on there. I have been very, very bad at uploading our shorts to Instagram. I'll need to get better at that. But if you follow us, I will be incentivized to post more. So check us out on all those places. And that's all I had to say about that. So that's a wrap. Everyone, guys, have fun golfing. And go make some money.
Run it. I can't take no